These crucial moments of the trading day, as always. And today we've got Josh Brown from Ritholtz Wealth Management here as well. Let's kick things off with the broader markets, seeing another massive swing today. The Dow on pace to close higher by more than 1,000 points. Currently 1,099 points. We're up over 4% for the Dow, just under 4% for the S&P. Of course, bouncing hard after another plunge yesterday as markets suggest the Federal Reserve's emergency rate cut. But not all investors are feeling euphoric. Hedge fund manager Bill Ackman told his investors late yesterday he's hedging his portfolio to protect against the likely substantial negative impact of the coronavirus outbreak. Be sure to check out CNBC Pro for this full story on Bill Ackman. Mike, I come to you first. I mean, it's interesting, clearly a massive bounce today.
Oh, yeah.
Interesting to see what is bouncing. We mentioned this earlier. Financials and energy, by far the worst performing sectors on the downside, also the worst performing in terms of the bounce.
It's quality, somewhat defensive stocks. It's not in yield stocks. So it really is a matter of, yes, we want to rebuild some kind of exposure given the fact that maybe we got sold out a little bit near the lows, but it's not so much a cyclically aggressive risk-seeking trade. I don't know if you want to extrapolate that or make too much of it. Obviously, healthcare is its individual story. That also gives things a little bit of a more stable defensive tone. But I honestly think, first of all, S&P is almost back to where we closed last Wednesday. We've had an average of a 4% daily range since then, and we've round-tripped to last Wednesday. So I think that's why, Bill Ackman says he's hedging. There's a ton of hedging going on today. People are loading up on a lot of puts.
I was going to say, it only took a 50 basis point rate cut to get us back to where we were last Wednesday.
Well, so the Fed got a lot of heat yesterday because the market fell a lot. It was an ugly day, and everyone said, see, look, the Fed's out of bullets, can't do anything. But, we had two big gains in the last 10 sessions. One came right into the Fed, and one is coming the day after. My point is, don't make too much of the action on a day where the Fed does something.
And when the market's swinging like this, honestly, you almost have to encompass such a wide range of possibilities. One being the Fed is impotent, and what's the point of a half-point cut? And two is we might have just gotten a half-point cut and the economy doesn't need it because ISM services looked okay, ADP employment. Maybe this thing is a temporary pause.
But let's see what happens.
No, exactly. We have to see.
Airline CEOs meeting at the White House today to discuss the coronavirus. CNBC's Phil LeBeau is there with more. Phil.
Sarah, this is news that we had today at the White House. It was not involving the meeting of President Trump with airline CEOs. It came from United Airlines announcing just within the last hour that because it is seeing a rapid and substantial drop in demand for future flights, it's adjusting its April schedule and adjusting it dramatically. International routes will be down 20%, basically international seat miles down 20%. Domestically, cutting the schedule by 10%, and it's going to be parking some of its wide-body planes. The airline is also trying to cut costs by offering employees unpaid leave of absence. No estimate in terms of how many the company expects to take that unpaid leave of absence, and it's also instituting a hiring freeze. As you take a look at shares of United as well as Delta, American, and Southwest, keep in mind that the CEOs were here at the White House to talk with the president and the coronavirus task force about the efforts made by the industry to make it safe for people to fly and to track people coming in from overseas who may be infected with the coronavirus. So as a result, that story largely overshadowed by the news from United within the last hour, where United is saying it will be cutting its schedule substantially in April. Don't be surprised if we see the same thing from other airlines in the next few days.
Phil, thanks so much for that. Josh, do you hold these guys directly, or just a bit? You get some exposure via Berkshire Hathaway?
Well, I think that's probably preferable these days. If you're going to have any airline exposure, Buffett's got between 4 and 10% of the four majors, or the three majors and Southwest. Mm-hmm. I don't really have a strong sense that we're going to see a recovery, even in, like, let's say this whole thing blows over in a week or two. This is the kind of thing that will linger into the second quarter, just historically speaking. So I just feel like, what is the rush? If you really need to be in these stocks, it's not like they're selling at 4 or 5 times earnings. The E in PE ratio is surely going lower, even though estimates have already been cut. So I don't see any urgency to jump in. I acknowledge that they're better than they've ever been as an industry. The companies are better run than they've ever been. I get all that.
What are the expectations for earnings for airlines at this point?
I mean, they're on the way down. And they all look,
low.
to Josh's point, they all look super cheap. I think maybe you could spin it slightly to the positive and say they're cutting flights. They're not deciding all-out price war is the way to do this when demand goes down the way they have in the next couple of months.
But you have to think they'd be giving cheaper fares to get people on flights.
Here's what they're doing. JetBlue is